we got a close that's effectively in line with the market maker's implied move for the day, or a little bit below it, closing roughly back near where VWAP is, um, at about 6,600. That's hmm, I feel like that puts us in not a great position for Monday, but the uptrend hasn't failed yet, despite it picking up a little bit more volatility into close. Out here on futures, obviously a little bit closer to a failure, but I'd still want to see it lose like the 6,600 level to confirm a breakdown. Obviously, we don't know what news the weekend's going to bring, but we did see volatility turn down a bit today. Obviously, volatility like the carry on like the 10-day and the 30-day were quite high going into this morning. And we saw a lot of sellers step in willing to pick up that risk. So two things that we know right now is one, there's a lot of fucking sold puts below today's lows. And two, all of that put selling didn't really generate a ton of positive price action. Now we could continue to see this consolidate, bearish consolidation, but at some point it's likely to slip. Um, I'm not sure what data we have next week, but I'll look into that on like the Sunday stream. Yields coming down across the board again, so still showing demand for bonds. However, dollar actually retreating a little bit today. Gold, silver, gold pretty stable above 4,000, but silver continuing its pullback, and we see a drop in crude back to under 58 a barrel, down from recent 60. I will say that the spike in correlation that we got midday did reverse into close, so we are seeing some of that dispersion trade come back in. If we start to see a reversal in this, so we see core 1 month start to come down more substantially, I would expect at least a relief rally. I mean, we've sold off almost 6%, and not really with a ton of incoming bad news. So a lot of this is sentiment based, and generally in rallies that don't have, or drops that don't have any kind of significant catalyst, you'll see at least relief rallies happen. We got one yesterday, but it failed very hard. Today a little bit more stable, but off of a lower low. Putting some of yesterday's rally position back out of the money, but we're going to need to continue to probably see a build up in support in order for bulls to lever back up, and push the upside harder. Um, Core 3 months still rising, but bond volatility falling back, which is a bit weird. Leverage on the carry still quite high. End of day forward yield on volatility down from yesterday, but still at 8.85%, which is significantly positive. OPEX is now over, but don't forget SLD ends Monday morning. Skew starting to turn up a little bit, which might show some positivity. I feel like breadth probably reversed here on the 20-day movers, but we still have the majority of the index below its 200-day moving average, and that tends to propagate continued sell-offs. This is another kind of interesting point, is that despite all that put selling, it's not very much. And the demand for long volatility is still exceeding what we're seeing out of the put sellers. And while correlation didn't pick up as much as it did yesterday, it still picked up a bit. And the high for volatility today was still higher than yesterday. So, we're seeing short vol come in, but they're skittish. And that position could get pulled back really quickly. Chances of a Fed cut drop pretty sharply today, both on the January and the July contracts, pulling back, like fucking 5 points. Yeah, 5 points on both. 10 2-year continued to push up, which is starting to steepen a little bit, actually. The SOFR spread still at like 1 basis point, so not very significant. And we had buy volume today, a little bit higher than what we've seen since the start of November. So that's somewhat significant. So up volume higher than down volume, especially in this environment where the downside is seeing, ES and Q sold. But not a lot of change in leverage. So it's probably some put leverage fell off with the bounce, but not a lot of it. So we'll still need to see more repositioning next week. And this is a effective retest of the long-term trend from the low. And we closed, just above it. However, if this gets rejected, that sets up the next leg down. So still, questionable positioning kind of at a midpoint here at the 6,600 level. Um, we'll need to see how this plays out into like Monday, Tuesday. Obviously, if we get a confirmed breakout and push up, probably above like the 6660 level, that gives us, room out to the 200 MA where we'll be looking for our next kind of confirmation. However, if any failure before that level can pull back down, much like the initial test, if we continue to fail. And that opens quite a lot of downside after this, especially because delta from the JPM collar, which is, down here at 6330, will start to pick up. If we move substantially below like 6,500, the delta on that's going to rocket and it's going to drag spot down really hard. In addition to ramping volatility up quite a bit on the longer time frames. So, all of that stuff to watch going into next week. We'll see. I mean, it still looks like crypto's selling off really hard, which is similar to effects we saw at the start of like 2022. And then, uncertainty around pricing and Fed direction, both setting up a very similar scenario to the end of like the 2021 rally. So we'll just kind of watch this as it develops. Keep an eye on, important levels like gamma neutral, and I guess delta neutral to the downside, and major monthly levels like 6508, 6360, 6330. What is it? 6360. That's pretty important as well. It's like the September low. Um, that's about it. So I will see you guys Sunday. Thank you so much for tuning in. I'll catch you later. Have a good weekend. Peace.